Hello. So it's been a while since I posted some educational videos, and today we'll be looking forward to learn a few step guides because I just talked about them uh, on my past videos. So make sure you check it because I've been having a lot of questions, the same things I keep explaining every day. But you know, we need everyone to understand the market. So we'll be using a gold trade as our example, but today specifically we'll be flowing uh, with this flow of how you can analyze the market from top to down. Okay? So the top, which means we are analyzing the market from the monthly time frame. So once you come on chart, make sure all your things go according to your trading plan. Then on your chart, this is how you can flow. Also, this is for the beginner level. If anyone is anyone who is the beginner, you can simply use this flow of the market. So the first step is to identify the bias. I said it earlier, and I'll be talking about it. So the first step is to identify the bias. It's either the monthly or the weekly. It doesn't need to be monthly and weekly. It's either monthly or weekly. Once you find the perfect bias for you, go on the trend. The trend is daily and 4 hours. On the trend, it's either it's either the daily or the 4 hours. So for instance, on the monthly or weekly, we have the bearish structure. We need to see the trend is also bearish. Once you have spotted that, the other thing is to go to the areas of liquidity. For those who don't understand about the areas of liquidity, simply an area of liquidity is the marketplace suitable for conducting business. We can't buy from anywhere in the market. We can't sell from anywhere in the market unless we have the areas of liquidities. Now, we have those areas of liquidity that have high chances of holding the price. High chances of holding the price. These are what we call the authenticated area of liquidity. That, in most cases, we use liquidity consumption first as our entry. Of course, I'll be talking it here on entries. So, authenticated areas of liquidity, these are the areas of liquidity that have high chances of holding the price. It doesn't mean the rest doesn't hold the price. They do, but authenticated, they got high chances. And we have the non-authenticated area of liquidity that they have low chances, which means they might hold or they might not hold. But on this non-authenticated area of liquidity, we only use time frame coordination to enter the market, which means we need to flow with the time frame coordination. We don't need to go on any time frame in order for us to get the entries on this area of liquidity. We need for the non-authenticated area of liquidity. We need the time frame coordination, strictly time frame coordination. On the entries, we'll use the shift coordination, and we can use the candle failure and the momentum failure inside that area of liquidity because these are the confirmation entries. On the non-authenticated area of liquidity, we will never, and you should never use the liquidity consumption. You need to understand that. After you have spotted your entries, then your exits will be on you will find the exit, the stop losses, and the take profits. Those are the exits. So with procedures, we'll be checking the rest on where we'll find our best structures in the market. Let's say this is the monthly time frame. We won't be looking to trade the past. That's it. We're not looking to trade. We need to trade the present. What's happening? right now. So our best chances, yeah, we know our structure here on the gold, this gold is bullish on the monthly time frame. So you can check here, it's bullish on the weekly. The weekly is the best time frame I can suggest to everyone. So on the weekly, we see the bias is bullish on the weekly, as you can clearly see here. Let me just do this. Let's say we want to trade this weekend. We need to find the opportunity. So on the weekly is bullish. So we can check here, weekly is bullish. And also we need to go on the trend. You can note down this to find, you can note down this in order for you to be analyzing the market. So for the trend, it's either daily or 4 hours. So it's either daily, we can see on our daily, it's also bullish, or 4 hours, also bullish. You can clearly see here, 4 hours is bullish. So the next step is to find the area of liquidity. You need to check on your side. Do you have authenticated area of liquidity? If yes, any nearest authenticated area of liquidity will be used for you to take the trade because it's bullish, will be used for you to take the trade to the upside direction. But do we have non-authenticated area of liquidity? If yes, also you need to consider it, but make sure it offers you what we call the shift coordination or the swing point failure or the candle failure or the momentum failure inside that area of liquidity. Let's talk about the non-authenticated area of liquidity. Of course, we have, let me show you, this is authenticated area of liquidity. This is authenticated area of liquidity. This has already been consumed. This is authenticated area of liquidity. Also, this has already been consumed. But this one plays a part as authenticated and non-authenticated area of liquidity. But we can clearly see our authenticated area of liquidity has already been consumed. So our nearest structure here to trade is the non-authenticated area of liquidity, which is the area below here. This is the area below is the non-authenticated. We have liquidities from the below structure here. If you didn't understand more about the liquidity, kindly go and check the video that I explained about the areas of liquidity. So this is our authenticated, non-authenticated area of liquidity. The next step is to find the entries. Now, how do we enter on this non-authenticated area of liquidity? In case the market offers us some position, we need to wait. For instance, this is 4 hours. Its coordinated time frame is 30 minutes. So on 30 minutes time frame here, we need to wait for what we call the shift and formation in order for us we can enter the market. So make sure you follow this guide in a clear way. So let us proceed to see if we can have the shift and formation after price entering this area of liquidity. So we see price came to consume multiple times our authenticated area of liquidity. So any liquidities below this structure here, we can't consider them as the authenticated because we understand the type 3 authenticated area of liquidity. Price will only consume the liquidities from the top structure or the bottom structure. I mean, just here or just here. So it's below or the above or the below. That's the authenticated data for liquidity type 3. So we see that price from here, it just came to consume the liquidities from this area of liquidity, went higher. Then what we are trading the below structures here that are non-authenticated areas of liquidity. So we need to have the shift information in order for us to be trading this kind of area of liquidity. So at this point, we already have the shift, the formation, but we don't have the shift. Why am I saying we don't have the shift? Because we need to see a shift is confirmed. You need to keep in mind that a confirmed shift is the one that can be considered. So for instance here, this won't be a confirmed shift because we see price hasn't validated the structure. But this one is the one that to take into consideration as the confirmed shift, because the price confirmed a validation and okay, let me play out, and closed above to invalidate the structure. So this one is the confirmed shift, which means now we are trading this area of liquidity, which is inside formation. Now, the other step is to look for the engineered liquidity or failed engineered liquidity in its coordinated time frame. Remember, engineered liquidity or failed engineered liquidity in its coordinated time frame, which is 5 minutes time frame. So this is where we can look after the engineered liquidity or failed. So this will be our engineered liquidity, failed, not engineered. This is failed, because if we consider the engineered, it's down below here. So we will consider the failed engineered liquidity. So this will be our entry, and our risk will be up to this structure below. Let us measure and see if we have 25 pips, 23 pips here. So if you would love to refine, you can refine to get more, the few pips from this structure. Let us see on our 1 minute time frame as well as its coordinated time frame, and refine more to get the best entry. This one is the nearest to this price, and we can use this as our structure. That is in order for us to refine the entry. So this becomes our entry and our exit of 12 pips. So we have minimized half of the risk. Okay. So remember, we need to check our list. We already found the entry. We already found the exit. Now the entry is here. The exit based on the stop loss is down here. But we need to find also the entry, the exit based on the loss. The profit, sorry. So that might be our area or this point. So it's either you take your profits on these levels, the points, these, we call them the first trouble areas, the FTAs. These are the point, the next support levels or the next resistance levels. So that's our entry, and we'll be considering taking the trade there. So I decided to discuss about this because I saw it happened yesterday. And I said, okay, it will be best for me to explain it. So it's 12.6 pips, and we are getting almost 300 pips, 270, 220, 272 pips. Yeah, 272 pips here. That's our take profit. So you have seen already we are on, let me mark here. Let me do this. Where's my wrist? Yeah, here. We have the bias bullish, trend bullish, area of liquidity bullish as well. It's a non-authenticated, so which means we are trading non-authenticated. We have the entry, we have the exits, and we are good to go. So let me proceed. Let me proceed with the entry. Let me just clear some lines. Of course, everything is understandable here. So this is our entry, and this is our exit. And if the price closes above this structure here, you can still hold. If it doesn't, then there's no need to hold. You can clearly see the price came here, tapped, then proceeded to the upside direction. Let's see. And we have the engulfing candlesticks, which means a nice push to the upside direction. So price closed above, you can still hold to the other highs, and that's how you'll be taking your trades and holding for a longer period of time. So this is a step-by-step on how you can analyze the market. I hope this video will be helpful on your side. I really hope that, because yeah, it's also a beginner level. Even if you're a beginner, it will be easy for you to understand how you can flow from top major constant time frame the other time frame that we mine a constant time frame, which are the trends, them, so that you can get the entries in a very correct way. So you need to be very smart in order for you to accomplish such kind of thing. Remember, it's an area of liquidity. We came from the monthly going down to 4 hours and daily, so that you can get such kind of a nice setup. So I guess that's it, and thank you very much. Make sure don't forget to subscribe, to follow, and that's it. And without forgetting, the classes will resume on in May. So in May, we are considering to resume the classes. Thank you, and enjoy the video, everyone. Of course, I'll be making an announcement on my YouTube channel. I mean, on my Instagram. So don't forget to stay up to date.